Hello, fellow RoboCapitals. Hope you're well. So, big news out of the Bank of England. They are expecting inflation to come down below 2%. And I'm not talking about over the next 6 months. I'm talking about tomorrow. Tomorrow, their inflation numbers come out for the month of April, and they're expecting them to go down to 2%. Now, you may say, George, that's no big deal. They're at 2.1 or whatever. No. They're at 3.2 right now. So it's 1 month. They're expecting now there could be base effects and whatnot, but still, this is quite literally a crash in inflation expectations from the Bank of England and many economists over there. Now, I'm not saying that the BOE is right. I'm not saying that economists are right. Usually they're wrong. But it's worth diving into what they're saying to see if this could be applicable to the United States, Jerome Powell. I mean, all these economies at the end of the day are interconnected. I mean, go back and look at the 1970s. Why is it that every single country, for the most part, experienced consumer price inflation? Why is it that every single country in 2022 experienced consumer price inflation, including right here in Colombia, by the way? So if we're seeing all these other countries outside of the United States experiencing disinflation and potentially even deflation, not that we're there yet, should we expect the United States to have a different outcome? My base case would be no, but I'll let you be the judge. Let's get right over to CNBC and see what on earth the details are about this collapse in inflation expectations in the UK, and then understand why they're saying this. And of course, they're putting this magical rosy spin on it. It's all rainbows, sunshine, and unicorns until you stop and think and actually use some common sense. And then you're like, wait a minute here. Maybe this isn't such a good thing. Maybe this is indicating that we're heading toward a recession, if not something worse. So getting over to this article, here we are. Britain's inflation rate could be about to drop below the Bank of England's 2% target. Below. And I'd like to remind all of you Americans that might not have been following this, their headline CPI was north of 11%. 11. And they experienced consumer price inflation for pretty much the same reasons we did, although they didn't have as much stimulus. I'm saying that I'm 90% sure, but not completely sure, because I haven't done that research. So kind of take that one with a grain of salt. But if my memory serves me right, I don't think they did the same amount of stimulus that the United States did, which is definitely a factor for sure. Key talking points. Economists see the latest UK inflation print out Wednesday, tomorrow, by the way, taking the headline rate near or even below the BOE's 2% target. That is largely due to energy prices. Now, here's where it gets a little murky with the energy prices as well. More on that in just a moment. Markets remain divided on the chance of a June interest rate cut. See, what's amazing to me is the CNBC types, the talking heads, all they care about is what the central bank is going to do to interest rates. That, as if that's the main part of the story here, or as if that's what we should be focused on. Not saying, I wonder why inflation could be dropping. Let's just assume that it does for a moment. And I understand the inflation numbers are completely and totally inaccurate, and I agree with you. But I think the trend is what is accurate. Even if you look at like shadow stats, I used that for a video yesterday and for a whiteboard today, the trend is still the exact same. Even if the headline number is a lot lower than it actually is in the real economy. But my point here is that all the talking heads in the mainstream media, they're all fixated on what the Fed will do or what the BOE will do or the ECB, instead of taking a step back and saying, well, wait a minute. If inflation is going from 3.2% down to 2% or even lower in 1 month, just in the April reading, what does that tell us about the underlying economy? Does that mean that the economy is just doing amazingly well and that it's booming? Oh, no. No. In fact, that could mean that the economy is going into a recession. That could mean the unemployment rate is going up. See, they never even consider that stuff because it's all about bad news being good news until bad news is bad news. Getting back to the article. That would represent, yeah, like I was saying, when I first saw this article, I thought it was maybe at like 2.3% now, and it's going down potentially below 2. And I'm like, okay, I get it. It's a big deal because that's their target. But then when I saw that the current level is 3.2%, wow, they say that could make or break June interest rate cut. And again, this is in the UK. But if it's happening in the UK, what's the probability that it doesn't happen and it doesn't play out the same way in the United States? I think extremely, extremely low. They might just be on a little bit different timeline. The decline will largely be driven by the energy market. Here's where it gets a little murky. After the regulator set cap on household electricity and gas bills came down by 12%. So for any of you that are in the UK, if you could help me out with this one, I would greatly appreciate it. Maybe let me know in the chat or in the comments of this video. I'm reading this to mean that they have price controls, the government, on electricity and gas bills, and the price control level is coming down by 12%. And that's what's going to lead to this significant drop in the CPI. But if that's the case, I mean, can the Bank of England really claim victory that they brought down the CPI? No, the only way you're bringing down CPI is just through price controls. So if that's all that we're talking about here, look, if you bring down, this is only temporary. Sure, you might get it down to 2%. Yay, because we made it mandatory for employers to bring down prices. But what does that do to supply? It's going to decrease supply, and sooner or later, you're going to have to get rid of the stupid price controls. And then what's going to happen to prices? They're going to be triple of what they were prior to those price controls. Any economist out there knows that price controls don't work. And Krugman, for heaven's sakes, would admit that price controls don't work and only limit supply. And in the long run, it makes prices higher than they otherwise would have been. So that's where, if I'm reading this correctly, that would be a variable that we have to consider here. That if the only reason for the inflation number to go down to 2% is just because of a price control, okay, then maybe that doesn't tell us a lot about the underlying economy. But if it's not due strictly to price controls, then from my standpoint, this tells us that the economy is slowing down to the point where you could argue, not that the central planners would tell you this, but you could argue that it's going into or potentially in recession right now. Getting back to the article. A reading below 2% on Wednesday would be the lowest headline inflation since April of 2021, cooling from a peak of 11.1%. Wow. The country has been hit by a range of inflationary pressures, tight labor market, weakness in the currency cost of imports. Okay, so they've seen some of the, what should I say? They've seen some of the inputs to consumer prices that we have had in the United States, but they have experienced a driver that is substantially different, and that is the value of their currency going down, where the value of our currency has been going up. You say, George, what are you talking about? The currency, the dollar's doomed. It's crashing. Look at prices. Look at how much I'm paying for groceries. No, that's not what I'm referring to. I'm talking about the dollar relative to other currencies. Why does that matter for Americans? You have a perfect argument, very valid argument, that the dollar is crashing relative to goods and services in the United States. No one is disputing that. Absolutely true. Unfortunately, the dollar would be crashing even more if it wasn't going up against other currencies. Why? Because the stronger the dollar is relative to the yen or the euro, let's say, what that means is the imports get cheaper. And since the United States imports the majority of what we consume at Home Depot, Target, Walmart, that means that the stronger the dollar is relative to other currencies, especially with our trading partners, then that means that the stuff that we're buying at Walmart is cheaper than it otherwise would have been, even if the prices are still going up. That's the point there. And they might not have seen this benefit, they, the consumer in the UK, because their currency is crashing. I don't know if it's crashing, but it's going down against the dollar. And therefore, they've got to pay more of the stuff that they're importing that's denominated in those dollars. This will be crucial. Now I'm quoting here. This will be crucial in determining whether the first interest rate cut from 5.25%, and again, they're right at the Fed. So, you know, to say that these guys don't talk and that it's independent monetary policy, come on. I got some oceanfront property in Arizona I'm going to sell you. What's more important is what happens next. We think inflation will fall further, perhaps even to 1% later this year. And this is a UK economist at Capital Economics, Ashley Webb. So this is where I would look at that number as far as the price controls, assuming that's accurate. And I would say to myself, okay, there's got to be something more to it. Because if it was just the price controls on the energy, assuming that's what's happening, I don't think this Ashley Webb gal would come out and expect that prices, or the increase in prices, would drop not just down to 2%, but down to 1%. Just trying to put the pieces of the puzzle together here. BOE Governor Andrew Bailey said the latest figures were encouraging. Encouraging? Andrew, why do you think let's assume that the inflation rate is coming down. Why do you think that's coming down? Because you have a booming economy? Or do you think it's because the economy is going into a recession? And if it's going into a recession, I don't know that that's encouraging. I mean, sure, it's encouraging for prices going down, but is that going to be encouraging for all the people that are going to lose their jobs? Probably not. BOE Deputy Governor Ben Broadbent said on Monday in a speech that if inflation continues to move in line with forecasts, it's possible bank rate cuts sometime over the summer. The bank could cut rates sometime over the summer. So you see, this always goes back to, oh, this is fantastic news. This is great news. This is great news. Why? Oh, because that means lower interest rates, lower interest rates, lower interest rates, lower interest rates. Yeah, you know what? We got lower interest rates in 2008 and 2009. Oh, by the way, we also got lower interest rates in March of 2020. Was that encouraging? Was that good news? No. Usually lower interest rates are because the stuff's hitting the fan, for heaven's sake. Go back and look at history, Ben. Look at history. Look at the yield curve. Look at the Fed funds rate, for that matter. Show me the last time the Fed funds was paused. Show me the last time that they, A, started increasing interest rates. That would be never. Or B, started decreasing rates because they had achieved a soft landing. That also would be never. Go back to 1950, when you have an inverted yield curve and you have Fed funds just plateauing, the next rate is always down. And that rate cut is never a result of a soft landing or a no landing. It's always a result of the stuff hitting the fan. So why should this time be different? I mean, maybe it is. Again, there are no certainties. There are only probabilities. But if it's played out this time, if it's played out this way, literally like 10 times since 1950, You would think that these central planners in the mainstream media would be looking at these inflation numbers, assuming that the trend is accurate, and saying to themselves, maybe actually this is not encouraging. Maybe this is the economy telling us that it's fundamentally unsound. Getting back to the article, economists ING see inflation coming in within a whisker of 2% in April. So again, that's tomorrow's print. I'm really actually excited to see this. This is big news. But dipping below in May and staying there for the most of the remainder of the year. So if it's going sub 2%, now all of a sudden, if you're looking at this through the lens of the central bank, you're in jeopardy of deflation. So that's why you're dropping rates. So if you're in jeopardy of deflation, then how on earth is this encouraging? Right? What's encouraging if inflation is just staying there or maybe even going up and you just keep rates the same and you see the long end of the curve going up, that you get an uninversion due to a bear steepener. That's what's encouraging. But we're seeing the opposite of that right now. There you go. It's really incredible stuff out of the Bank of England. And you have to step back and say, okay, well, there were some differences, that's for sure, between the United States and the UK. As far as the dollar being strong relative to other currencies, stimmy checks, those are the first things that come to mind. That absolutely makes a difference. But what's interesting is those are offsetting to a certain degree, right? Because the dollar being strong, that would lead to prices being lower than they otherwise would have been. But then the stimmy checks obviously would be a tailwind to consumer price inflation. So those being the two big differences between what we did in the UK, I still come to the same conclusion that if this is the way it's playing out in the UK, and we'll have to see tomorrow, then I can't imagine it wouldn't play out the exact same way in the United States. Let me know what you think. Again, we're only talking about probabilities. All right, guys, enjoy the rest of your afternoon. As always, make sure that you're standing up for freedom, liberty, free market capitalism, and make sure you get your tickets to Rebel Capitalist Live coming up here May 31st. It's going to be next week, for heaven's sakes. It's going to be the best event we've done. I cannot wait. Cannot wait to meet all you guys and hear from the speakers in Orlando. I'm leaving on Friday, but it's the Friday after that. So go to rebelcapitalistlive.com, get your tickets. We'll see you in the next video, and we'll see you in Orlando May 31st.